Good morning, traders. Welcome to this live currency strength indicator table video with me, John, on this Wednesday, the 2nd of August. Just a quick caveat before we start the video. My live account is still showing some missing data at the moment, so I've just switched over to a demo for now just to get that data back so that we can talk about the key levels of interest. Not sure what's really going on with that. So we'll have to try and hopefully sort that out in the next day or so. So if you do see demo in the top corner here, I do have the live. It's just not showing me the data, which is unusual. You would have thought it would be the other way around, but for some reason it's not coming up. So switched over to the demo just to show you what's been going on. I'm going to kick things off with just a quick update to pound Aussie. We were talking about being long pound Aussie at the 191.50 handle. If you are still in this position, you are around about 270 pips up. At one point you were around 300 pips up. Target for this is still around about the 197 handle, which comes in around about this area through here. But what I'll be doing is if you're in that position, I'd be looking to manage that position now. I'd be looking to bring stop losses up to at least break even. If we go to a 4-hour time frame, you can see there's actually a bit of a consolidation there. You could actually bring your stop loss and at least lock in a little bit of profit, perhaps around about 120 pips of profit there. If you're not in this position, then I don't think there's much chance to get back in. Looking at the tables, we can see pound is S3 at the moment, doesn't have confluence with the trend traders, so I'm not going to look for any positions on that. Plus we've got Bank of England announcement coming up, so nothing to look for there. However, Aussie US dollar still remains the top of our trend traders and day traders, so I have put some levels on the Aussie US dollar chart that we could look into going into today's session. So if we just pop up to the weekly time frame, Aussie US dollar pretty much working within the 68.75 and 6,500. Let me just get rid of this fib for a second. Working within also this kind of consolidation pattern. You see I've got trend line support running through, which kind of intersects around about the 95.50, 65.50. Rejection we had at the 68.75. So we've got a couple of different narratives being played out here on Aussie US dollar. At the moment, price is bearish, so we could come and test this trend line support, perhaps even the 0 spot 6,500 level. Now, if price is going to do that, naturally I want to be looking at pullback. So I've just gone onto this 8-hour chart here, just zoom out a little bit, and you can see that development of this downward trend. So when we last discussed Aussie US dollar, we're actually looking for a rejection in and around this area here. It's around about the 0 spot 67 handle, and it was support turned resistance. So at that point we were looking to see if that area would act as a resistance point. It did. Price has traded to the downside. We've now made new lower lows. So if that trend is going to continue down to these points of interest, then I want to be looking for potential entries on pullbacks, and the 66.50 area looks like a nice area to do that from. What I did do was just put a Fibonacci on, and I just went from the swing high down to the swing low, the current swing low. Obviously that could change, but you can see we've got the 50% and the 38.2% sitting in quite a decent area there. So I'm looking to see if price will come back into this sort of zone. We've also got this trend line resistance running through as well, so multiple confluence is in and around this area here for an opportunity. So what I'm going to do on the live account, but I'll just do it here just to show you as an example. I'm just going to put an alert in at that 0 spot 66.30, so that when price, or if price does pull back into that zone, we can be watching it for those key entry points. If I go down to the hourly chart, you can see we've also got the 50 moving average there as well. So what we may look for is if price comes back into that area there, back into this resistance, do we get like a double top pattern? Do we get a rejection of the 50 MA? Anything like that could be a good opportunity to see price trade to the downside. So quite like that opportunity there on Aussie US dollar. So we'll see if we do get some kind of retracement back to that point. Going on to another chart of interest then, so we're going to stick with the US dollar theme at the moment. We're going to go over to Kiwi US dollar. Difference between Aussie and Kiwi at the moment is that Kiwi is actually coming into some areas of support, whereas Aussie US dollar's got a little bit of a way to go. Now Kiwi dollar's come into this trend line support through here. If we go down into that 8-hour time frame as well, we're approaching this zone where the 6075 is, or the 6-1 handle we've just retested at the moment. Again, we've got a couple of options. If we were to look at this market over Aussie US dollar, then we could look for the pullback into prior lows, trendline resistance for a move down into the 0.6075. Do I like that one more than Aussie US dollar? Probably not though, so just be aware that we are pretty close to these key supporting levels on Kiwi. Euro Aussie features as well. Obviously we've talked about pound Aussie, but Euro Aussie is a chart that is now featured on the tables. What I would say about Euro Aussie is we're at a massive level of resistance. The 1.67 handle, these prior highs that formed back in April, is now being retested, so a little bit of a tricky market condition there. The only thing I would say is if we go to the 8-hour, we have had like a range that has been traded through, so what we may see is a pullback into that range and then maybe a continuation. The only problem I have with that is the risk reward ratio is pretty much gone, because let's say we wanted to get long at this range high, ATR is saying around about 166 pips. It's 238 pips to the low, and it's 140 pips back to that level at 1.67. So risk reward ratio is pretty much gone with that market. Very similar to Kiwi, Euro Kiwi as well. 1.8075, the highs that formed back in July, as well as these highs back in April, and yeah, we are making our way up to that, but it's going to be a bit tricky to get that risk reward ratio, because if price does pull back, let's say we like the entries at prior highs at the sort of 1.7890s, we need 177 pip stop at least, but to that level is 180, so you're looking at a 1-to-1 at best. So out of them all, obviously pound Aussie is obviously doing really well, so that's great, but Aussie US dollar has this sort of better risk reward ratio as well as sort of cleaner price action that we can work with. So Aussie US dollar I quite like. Obviously we were talking about yen yesterday, that just completely flipped. Again this morning we saw it actually appear on the weak side at one point, so sorry, on the strong side at one point this morning, so it was interesting to see that. But I'm expecting some pullbacks in the Aussie US dollar market. We do have some dollar data coming up today. We have the ADP non-farm employment change at 1:15 today, so that could be the catalyst that drives prices around and see price maybe pull back into this zone. So I'm going to set an alert, we'll see what happens, and I'll catch you in the next video.